Hey everybody, this is Alex from KeeneOnTheMarket.com with your end of week market recap video. Well, I don't really know what to say. I'm a little bit confused. The market's been a little crazy this week. I'm going to go over the charts a little bit slower and kind of talk about how I still think we are in a sucker's rally. You can see here in the left chart, you know, the transports, the Dow transports have been not only staying below a thicket of averages, the 200-day, the 100-day, the 50-day, the 20-day, and the 150-day. Basically, the Dow transports is not only in a downtrend, but it's also has tremendous amount of resistance. You can see it's got 4 lower highs, lower lows. So this is non-confirmative for the Dow Jones Industrials. The Dow Jones Industrials is the opposite. It's got now a 5-wave push divergence out, up, and above the Dow transport. So basically, you know, as Dow theory outlines, this is non-confirmative. This move is considered to be a sucker's rally or a fool's rally. The one curious thing that I do want to look at is basically the S&P technicals for the dailies. Most of the averagers are doing the same thing, but I want to basically focus here on the S&P. So you can see the key zones that I've outlined where right here, this dashed line at 1339, we actually closed slightly above it, so we closed above resistance. This pattern right here could probably be construed as a rising 3 methods pattern. So this is actually a bullish candle pattern. So as you can see, the overall macro viewpoint of intermarket analysis looking at the Dow Jones transports and the industrials is non-confirmative, but if we just take a look right at this zone here with the S&P, this is actually a bullish continuation pattern. So that's why I'm actually really confused right now. I actually don't have a position on. I was leaning towards being slightly bearish going into this week. It's actually against our trading system. As you can see, we're above the Ichimoku cloud, so technically I should be looking for pullback areas. I just didn't see a pullback area that I thought was good in the last couple weeks, so I've been more focusing on maybe possible tops. We actually did have a interim sell signal yesterday, which was quite the opposite of what happened today. Obviously, if you would have sold on yesterday's bar, you would have been stopped out or you'd be looking at a loss. So I'm going into the weekend flat. I'm a little confused. Whenever I see the market really doing the opposite of where I think it's going to go, I kind of like to get flat and clear my mind. I'm obviously going to come in this weekend and really do a very thorough technical analysis viewpoint on all of the things I'm looking at. You can see we had quite a bit of volume today, so whether or not this is short covering or actual buying, I'm actually going to go and dig down and look at a lot of stocks. The sentiment zone oscillator actually did not have an overbought standpoint, so some of the things I'm looking at in the bullish case are lining up with saying that we could rally a little bit higher. I actually think that there's fairly strong resistance up here at 1401, and the way I get that is I basically was doing some Fibonacci overlays, and I'm measuring the top here, and I'm measuring the bottom move here. And then you can see we pop just above the 786 line. For those of you who follow these harmonic zones, there's a lot more Fibonacci zones that line up that are really important to take into consideration than just the 382 and the 618. So you can see we actually used the 618 yesterday as somewhat support. We ranged all the way up through the 786, and now the next one you can see is 140208. So right there's, I think, topside resistance for next week. I think it's going to be very interesting. This market's a little crazy. You know, the dollar was smashed today and everything was up. Also, I want to talk about key cycle areas. We talk about cycle areas, so we look at measurements along the x-axis in the trading room for about an hour sometimes during the day. We had a cycle day here, which pegged the top here on the 31st. I thought that was really good. We actually had a minor cycle low, so a smaller wave cycle is actually tomorrow, which lands on a weekend, so it's basically the Friday and the Monday are the same. The next one I have doesn't really come in until about the 20th or the 24th of August. So basically there's not much push and pull in the cycle until about 20th and 24th of August for the S&P. So as long as we're making these interim higher high, higher low corrective-like moves, we could still slightly move higher. This is a very corrective move environment. This is not very impulsive. Corrective moves usually move against the overall trend. So you can see the 5-wave move down here was really easy to see. 1, A, B, C, 2, 3, 4, 5. So this is very impulsive wave, putting us in the bearish position. And then this is probably a double complex running flat. You know, this can be ABC1, ABC2, ABC3. So there's a lot of evidence suggesting in Elliott wave, Dow theory, you know, that this is a corrective wave against the overall trend to the downside, but we haven't seen it in the daily price action yet. We haven't seen it in the momentum. You can see also the RSI has, you know, stayed up in this bullish territory above the 50 line, but it hasn't broken to new highs. You know, the stochastics are pretty much pegged in the ceiling. There was an interim sell signal that I took here, selling a minor call spread. So that's pretty thorough for the S&P. Let's take a look at some other charts. The euro, I just think the currency markets have been rip-roaring. It's really caused a lot of craziness here in the other markets. The euro is interesting. As I look at trend measurement, I look at trend direction. So even though we had this huge bullish bar today, actually could be, you know, one of 3 white soldiers coming up here. We did not really actually get a confirmation for the bullish trend. You could see that when this red line is above the blue line, that is indicative of the 14-period trend being bearish. So we're still in the bearish trend with the euro, even with this big movement. The euro is quite actually in a different posture than the S&P. You can see it's trading below the Kumo cloud, and the Chiku-span line, which is the longer-term momentum line, is still below the current price. So the euro is actually still probably a better bet if I'm looking to play for a bearish bet to the downside. We actually hit an interim target I had here of 21 even. 120 is the next target, and then actually my targets are a lot lower beneath here for Fibonacci extension. So I'm looking for overbought next week for the euro for possible entry to the short side. I use this sentiment zone oscillator quite thoroughly. Let's look at one more market. You know, this could have been maybe the catalyst that came in here. I know this chart looks a little crazy, but you know, basically there was rumor or news of Russia putting or sending warships full of, and I quote, hundreds of Marines, you know, into close to the Syrian waters. So basically, oil got a bid. You know, from studying warlike catalysts in the past, Persian Gulf, 9/11, other things of that nature. Some types of defense catalysts could spike oil really high, really fast. It's not out of the ballpark for oil to spike $10, $20, $30 on a if bombs start flying over something. So we had this falling 3 methods pattern. It only followed through just slightly, and now we've got kicking back into this what I call bearish / neutral territory. So basically, I think going in flat over the weekend is the smartest thing, and just reevaluating the market trends next week. The market's a little bit crazy. We're actually changing some things for the live trading room. We're adding a lot of really great additions to the software and the model. So if you would like a free trial, we're actually going to start extending free trials again once we get everything lined up for our current subscribers and let them, you know, see the benefits first. You can email sales@KeeneOnTheMarket, and I will talk to you guys on Monday.